We now come to the financial analysis of our companies. This is where we gather all the financial information we can and analyse it to determine whether the company in question is a growth company and whether it represents good value for money or not. And there are three main approaches we could take to this. The first one is to gather all the information and do the calculations ourselves, either using a calculator or in our heads if we're good enough. The problem with this is that it takes ages to gather all the data and do the calculations, and it's prone to errors unless you've got years of experience. The opposite extreme to this is to buy a black box system. This is where you plug in a range of companies into a piece of software and it spits out a few recommendations at the end. The problem with this is that you've no idea what criteria it uses to select companies, and you've no control over the whole process. In fact, this is how a lot of fund managers work. You've no control over the decisions they make, and you often don't know what criteria they use to select stocks. But there is a third way, a sort of middle ground if you like, and that's to gather all the financial information yourself, but put it into a spreadsheet that performs all the calculations for you. The spreadsheet can highlight whether the company has got growth potential, and it can also tell you whether it represents good value for money. The beauty of this approach is that you can see all the financial calculations yourself, and you have full control over the whole system. This is the approach that I take, using a spreadsheet I've designed and refined over many years. It gives me full control over the whole process, and I can always change criteria and refine my calculations if necessary. So let's take a look. So we'll go over to Google Drive and load the VGI master sheet. This loads with Apple by default, but we can change this to any company. At the top left we have share price and dividend information. Centrally we have a summary of information that tells us whether the company might have growth potential and whether it represents good value for money or not. Further down in the sheet we have sections for each of the statements, and we'll just scroll down to the income statement for the time being. Across the bottom we have tabs for analysis, which is the main sheet you're looking at now. We have summary information on the company, key ratio information that pulls 10 years of financial data automatically off the web for the company in question. We also have a charts tab that gives us summary information in chart format, and also financial statements that we might have imported. So let's go ahead and import some of the financial statements that we downloaded earlier. Go to File, Import. Now I've actually stored the financial statements on my Google Drive, but you could just as easily upload them from your hard drive if you want. So I'll go to Stock Data on my Google Drive. And let's go to our friend APU. Click on Cash Flow and then Select, and then check to insert a new sheet and then Import. Now unfortunately this is a manual process. I did automate it in the past, but websites change and it became a pain to try and update the code every time. And also it's very difficult to get 5 years of financial information for free from a website that allows you to automatically import the data. So we have to do it manually. Go down to APU's balance sheet. And finally we'll go for the income statement. So there we have the three statements we've just uploaded for APU. We'll just go back to the analysis tab, scroll up and change the ticker symbol to APU. So the spreadsheet has automatically got the last share price from the web at 44.88 and uploaded the income statement, balance sheet, etc. automatically. What we're looking for in the spreadsheet is lots of green like this and not very much, if any, red like this. So let's take a quick look at APU and see if it's a company that we think represents good value for money. Remember, these companies were chosen at random. We had random criteria when we were screening for them, so I don't expect any of the companies today to represent good value for money, or even be good growth companies for that matter. So we can see it has a good dividend yield of 8%, but we can't calculate the PEG ratio over 5 years, and the 1 year PEG ratio is negative, which isn't a good sign. Over in the summary information, we can't calculate margin of safety either, but the earnings are good at over 85%. Debt is very poor, and management don't seem to be making a good effort at getting a good return for investors. So I would definitely pass on this company. Let's try another one. Go to File, Import. And let's go to TIS, which is Orchid's Paper Products Company. Just go back to the Analysis tab and change the ticker symbol to TIS. Share price is updated to 24.91, and we can immediately see that we've got a lot more green showing for this company and no red so far, which is a good sign. This one also has a decent dividend yield of 5.62%. You remember we screened for companies that had a dividend yield of over 5%, so we would expect that. And although the PEG ratio over 5 years is greater than I would like, the 1 year ratio is pretty good. Over in the summary information though, we have a poor margin of safety of 12.84%, but good earnings and a debt that is only slightly above the 4 that I would normally go for. Management also seem to be doing a good job of getting a good return for investors, and the spreadsheet has calculated an intrinsic value per share of $41.73, which gives us a margin of safety of 68% on the current share price. If we just scroll down to see more of the income statement, again, most of this section is highlighted in green. And here we have averages for the gross profit margin over 1 and 5 years, which are very good. And net income growth is also quite good, but the net profit margin is fairly poor in my opinion. Owner earnings have been actually negative in the past year and can't be calculated for 5 years because 5 years ago owner earnings was 0. Earnings per share growth over 5 years is lower than I would like, and earnings have also been a little bit erratic, taking a dip in 2014. There's more information to look at in the analysis tab, but for now I would just say that Orchid Paper Products Company has some potential, and I would look into this one further, but it's not a definite buy at this stage. So I'd do the same for all the companies we screened in earlier lessons, and ideally have 2 or 3 that I would research further. I'll go into more detail about using all aspects of the spreadsheet in future lessons, but for now that just gives you a quick overview.